Hi, it's Biko Konstantinos here, and today I want to talk about cryptocurrencies. And I've got an urgent warning that volatility is really starting to increase. So let's get into it. Please smash a like on this video, and if you like this content and you get something out of it or enjoy it, please consider subscribing, as I want to keep making content that you find useful and is valuable.
Okay, here's the chart of Bitcoin. So as we can see, Bitcoin's had a fantastic rally from basically November 2020. Um, really rose early on in 2021, just corrected a little bit. This here line is the 50 day moving average. So corrected down to about the 50-day moving average and then spiked really nicely. And lately it's been sort of flattening out. So the uptrend has been not as sharp. So it's tried to reach new highs in the high 50s, then another high in the around the 60,000, and then there was a peak here around the 64, 65,000 mark. Um, but this next high here is quite important because it wasn't able to reach a new high. So we didn't pass that previous high here around the 64, only managed just under 60, and now we can see the price trending quite sharply lower. Now it is still above this 200-day moving average, so it's still very strong in regards to where it's been at. However, as you can see, this 50-day moving average is starting to flatten out and even starting to decrease. So that's a sign that the shorter term momentum is starting to actually go down. Okay, another potential bearish pattern I'm seeing in the Bitcoin price is a potential head and shoulders pattern. So I've just written on here where the head and shoulders is placed in relation to the Bitcoin price. So what we look for is a high, which we would call the left shoulder. Then we look for a higher high than that, which we class as the head, which in this case was the high up to around 65,000. And then we look for a right shoulder, which is not as high as the head and possibly in line, or it doesn't have to be exactly in line with the left shoulder. So we call that the right shoulder. And then what we want to do is draw a neckline. So where we've had some sort of support, the price has rallied off a certain level. In this case, looking around about the 47, 48,000 mark, there was some support here prior to it rising up to what could be the right shoulder. And then because this is a bearish pattern, what we're going to look for is this neckline being broken. So if this support level here is no longer a support level, and what we mean by that is the price actually falls through, and what we need is an actual fall through. So in this case, you see Bitcoin currently at this stage has fallen a little bit below that neckline, but has rallied a little bit since then. We need to see it actually finish consecutive sort of sessions below this neckline price for us to then assume that this bearish pattern, this bearish head and shoulders pattern is actually being formed, and then we can trade based on that. But just looking at the charts, there is a potential head and shoulders pattern forming, and if Bitcoin was to close below this sort of support level here, if it starts to trade into the 40s and the low 40s, then I think the risk for the Bitcoin price is magnified, and it could then start to really turn into a downtrend. So this 50-day moving average would start to trend downwards, and the price would probably trade close to this 200-day moving average, and it'll be yet to seen whether it could rally off that 200-day moving average or if it would continue down into a bit of a downtrend from here. Okay, so as you can see, the crypto Bitcoin has risen a bit more slightly, is currently trading around 50,000 from a low of around 46,000. So it's very volatile. The Bitcoin price can have some huge swings. So at this stage, the neckline has not been fully broken. Um, but one day it could, fall through this neckline and keep going. So you just need to be aware of that in these sort of what we might call a topping type pattern. Now, if the price was to trade, say, back around this right hand shoulder again, then maybe we would say the head and shoulders pattern hasn't really formed. But you'd probably then assume if it's trading in this vicinity, you'd have maybe a sideways trading pattern. For us to get bullish on Bitcoin again, it would need to create a new high above the head height. So above this highest high of around 64, you'd want it to make a new high in the high 60s or even above, and then have a lower low and then keep trending upwards. So at this stage, the pattern sort of looks like a topping type pattern. It could turn into a sideways pattern if it just trades in a range between 60,000 and 50,000 for a while. Even if it's in that sideways pattern, you still need to be wary of a break downwards. So a break from support, and once it's a real clean break, it could then continue sharply. So you need to be aware and manage your strategies accordingly. If Bitcoin was to break down and start trading in the 40s and then into the 30s, then I would take that as a bearish signal for the entire crypto market, considering what a stable or what Bitcoin represents in regards to crypto. Pretty much, it's the main crypto, original cryptocurrency, and in everybody's minds in the wider community, they associate Bitcoin with cryptocurrencies. And if Bitcoin was start to trend down, it would be all over the news. It would be all over the financial news. Everyone would know about it, and that could have a significant downward type effect on the entire crypto market. Doesn't mean that there would be a few outstanding cryptocurrencies, but it does mean that the entire environment for cryptos might become a lot more bearish. Okay, now we're going to have a look at the Ethereum price chart. So as you can see with Ethereum, um, it was trending fairly lowish, I guess, since the start of 2021 when it really started to get a move on. So I'd say between start of 2021 through to let's have a look, around about March, there was a good uptrend. It was sort of hanging around this 50-day moving average. But then from April onwards, it's basically really just shot up. So the price here is just shot straight up, a long way above the 50-day moving average and sort of miles above the 200-day moving average. So Ethereum is looking extremely strong. But once something goes up this sharply, so it's sort of like was trending upwards, but then really shot straight up, then a lot more risk is now in the market. Now, I'll just point out two things: is these two trading days here with very long tails, candle tails, you can say. And so what that means is the price during a session was pushed lower, and then the price came up during that session. So it didn't finish off its lows. This is the current daily session at the moment, this red candle. So you can see with the Bitcoin fall before, Bitcoin and Ethereum were down about 10% or more at one stage. So Ethereum traded down to about 3,500, and now it's rallied it back to about 3,900. But one thing that long sort of candle tails can point out is that the risk or the volatility has increased for this stock. So when you look all through back in this trading over the last few months, there hasn't been any massive sort of tails going downwards where, the daily session was very, very volatile. But you can see two candles here with long tails so far, which suggests that the daily range for Ethereum is increasing, which means volatility is increasing. So what I would say with Ethereum, because it's so far above its moving averages, because it's shot up so quickly, and because volatility is increasing, it would just be a crypto to really just take care with, to manage any positions you had closely, because increased volatility can just mean that you can have increased price movements both up and down, but it also means that there's a lot more risk in the market. Some of the players are obviously getting a bit more risk averse. So what that might be is risk on. So because it was quickly traded so far down so quickly, there's some players in the market that might be starting to feel a bit of risk creeping into this market, that might be starting to look to exit their positions if they think there could be a quick sale or a quick sell down. So basically, it's just to me highlighting that for Ethereum, risks have increased, volatility has increased. So you'd need to take more care with your any positions and just consider your exit strategy if you do have positions.
So as you can see, by going through the Bitcoin and the Ethereum charts, one thing's clear: volatility is increasing. So that doesn't mean that Bitcoin or Ethereum won't continue to go up, but it just means that risk and volatility might continue to increase. So please trade with that in mind. Please trade safely, and all the best. Thanks for watching.